Good morning, welcome to Market View for Wednesday the 9th of July 2014. Starting off with the 30-minute chart from yesterday, we can see that we had a potential sell signal, the market moving sharply lower. However, this was just before the release of the manufacturing figures, and if you're watching the market live, you will have seen that this bar from the high to the low all happened within a matter of seconds, and then the market came off the lows in the sort of last 10 minutes of the 30-minute bar. So it looks good, but unfortunately it was one that was triggered immediately on the news, the fast-moving market. And what this is, as you can see from the price action after, is what's known in the trade as a shakeout. And the reason it's a shakeout is because if we have a quick look at the daily chart, you can see that the market is in a bull market, and most people will be long when they see this in the price chart and also based upon the fundamentals. So these shakeouts are designed to, as the name implies, to shake out the weak longs. So you've got this situation, the market's thrust down, you see the market come off the lows back to the psychological level there of 171, and the market finding support and then moving back to where the market had the initial break to the downside and shakeout there. So unfortunately there were no trades, or no signals rather, back to the upside, which is a shame. But if you have a look here, you can see that in the first couple of hours we've got a lot of volume here. A lot of selling with the green candles, and then you can see the market shake out. And then once the clean out is done, the market reverses and trades back to where it actually came from. On the overnight, the market stuck in this sideways range, so still fairly quiet really. If we hadn't have had this news item yesterday, we would have been stuck in the sideways range there. So in the daily chart, you can see the market was thrust down through the 171, the market then coming back through this 76% that we drew on yesterday. On the upside now, let's just draw in some resistance. We've got a high just here, and down to yesterday's low. We can draw in these fib retracement lines. I'm just going to remove the 62%, it's the 76 I'm more interested in. And this is where we can expect to see some resistance at 171.50. Now, again, expect a quiet day because on the news front, all we've got is the FOMC meeting minutes, not to be released until 7 p.m. this evening. So, again, keep this one in mind. So that's it for the news as well. On the Dow front, we've seen an increase in the implied volatility to 1908. This is because the Dow moved lower during yesterday's trading session, which we'll look at in just a moment. So we've seen the implied turning up and also the historic now to 7.9 as well. Sorry, that's not the historic. There's the historic there, and that's the that was the historic low for the implied volatility. We've gone up to 6.11 and 908 there for the implied. So both turning around and moving to the upside, and the reason for this is the Dow moved yesterday down 117 points from the previous day. Now, I've just mentioned the FOMC meeting minutes, so I wouldn't be at all surprised if we don't see the market move back off this one. So we're going to go from the recent high, which is Monday, down to yesterday's low, and then draw this in, and you can see there we've got a range of where the market could go back to. If we didn't have these minutes today, then I would expect a bit more weakness in the market, but as it is, that's what I will be looking for. On the downside, just in case the market does move lower, I would go from this low to this high, and you can see there yesterday the market trading down towards the 62% there. What we're looking for now after the release of the FOMC minutes in the Dow Jones is the market to trade back up, fail to close above the 76%, which we're going to leave on this chart now, and a failure to close below this will indicate to us that the market's out of steam. You can see on other occasions where this has happened, we've had a down move and then the market's come back and closed back above the 76%, gone back towards the recent high. And this is the same from this high down to this low as well. And you can see the market driving through the 76% there and also the recent high. So again, we're looking for the market to trade back up to the 76%, fail, and then once the market's made the sort of higher lows as it moves back, you can see this here, but fails to close above the 76%, then we will be looking for a potential short in the market. Right, well, that's it for this morning. Again, fairly brief, but that's all there is to report. So all things being equal, I will see you in tomorrow's market view. Have a good day. As ever, thank you for your support. It's very much appreciated. And as ever, thanks for watching.